Good afternoon, everyone. My name is Ruchin Goyal, and I'm very happy to be part of this esteemed panel. Our topic of discussion is the future of credit, the next revolution that is waiting to happen in the Indian financial system. We have a esteemed set of panel members with us today. I'll just quickly introduce the panel. We have Mr. Tewari, MD from State Bank of India. We have Mr. Nitesh Ranjan, ED from Union Bank. We have Mr. Rajeev Ahuja, ED from RBL. We have Srikanth, CEO from Perfios, and we have Mr. Mahesh joining us from Sahamati. So just to set the context, I'll take the first 10 odd minutes to share a small presentation, following which we'll go around the panel to have a set of discussions. If anyone in the audience would like to pose any question to any specific member in the panel or to me, please feel free to do it at any time during the discussion. All right, so we are here to talk about the future of credit, and I thought it's a good way to just look at what's happened in India over the last, I would say, many decades, and you will see we've really had 4 eras in our lending history. I would say the first era was pre-1990. It was an era, that was heavily regulated, largely dominated by, public sector banks with very strict, SLR, CRR norms, and the credit was very concentrated. The top 5 cities actually accounted for more than 65% of the total credit, the banking and NBFC credit. The 1990 to 2000 was the era of liberalization. We had new banks, private sector banks that came up. A lot of regulations were eased up. The share of private credit grew from 4% to 20%. But then the pace of change has since then continued to accelerate quite rapidly. The decade of 2000-2010 was when we saw the bureaus, being set up in India. The retail credit really took off. And if you look at mortgages, we had a 50% CAGR in this decade, year after year after year. Of course, starting from a very low base, right? And a large number of NBFCs came into doing lending both for retail but also for MSME. And then the next decade, the last decade, was really a decade of digital. We saw the entire India stack starting from Aadhaar, mobile phones, UPI going live. We've seen a huge revolution in India in terms of fintechs. In fact, I was just reading a report that talked about there are more unicorns in Bengaluru than most cities except Bay Area in US, right? So we have just surpassed UK in terms of number of unicorns that have come out of India. And we've seen a huge amount of business happening digitally over the last decade. Now, this is what has already happened in India. And the question, for the panel, are we ripe for the next level of disruption in the lending journey? And why do we say that? Now, despite all this evolution, if you look at where we are today, and if you look at different sectors, the corporate sector and the retail salary sector are very well served by formal financial institutions. They get loans at very competitive rates. A lot of their data is digitally available, and the lending journey has become quite frictionless. But if you keep going down, retail, self-employed, SME, micro units, and the entire informal sector, you will see the cost at which these entities are able to access finance is still quite high. And the friction in the journey is still quite high. And the question is, can we reduce this friction? Can some of these entities, micro, SMEs, people in the rural areas who have so far not been able to access finance, be able to do it much more seamlessly going forward? Now, if you look at the India stack, I think the foundation of the stack was laid by Aadhaar. Most Indians today have an identity that can be proven digitally. On top of the identity, we saw the rapid revolution that happened in payments. UPI has really digitized a large number of payments in India. And if you look at the adoption, it took 8 years for 90% enrollment at Aadhaar, but it took only 5 years in UPI. The pace of acceleration and adoption has dramatically gone up. And then on top of that is where this whole data layer is coming on. And this is the next level of evolution in the India stack. If you can have data of customers being shared digitally through their consent, right? And OCEN is all about an open architecture where the lenders and the borrowers can come on a platform and lending can become quite as seamless as today digital payments is. Now, what we've also seen in the financial ecosystem in India is when we have something which is closed, like Paytm was the first entity to introduce wallets in India, but the payments was largely wallet to wallet. There was a lot of friction if you had to transfer money from wallet to bank account or from one wallet to another wallet. It was not possible to make the payments. That era, it took 6 years for Paytm to have 100 million wallets. But when we had UPI, which was open architecture, which allowed for any bank to any bank transfer instantly, it took only 3 years, for 100 million VPAs. So open architecture promotes much faster adoption from the end customer. It reduces friction and it creates significantly lower costs and a win-win situation for all participants. The question is, are we ready for this kind of disruption when it comes to lending? Another thing, that has happened because of UPI is that apart from the explosion in terms of digital payments, the average ticket size has come down. So what you see on this page was that if you take all digital payments, including bank transfers, NEFT, IMPS, and UPI transfers, the average ticket size has come down from 60 or 1,000 to about 11,000 now, while the volumes have shot up. Right? Now we are witnessing something similar happening in financing. What you will see on this page is that the average ticket size across categories, whether it's property loans, business loans, loans to SMEs, or microfinance, enterprises, you will see the average ticket size has come down already by I would say it's come down by 50% to about 33%. And when the ticket size comes down, what it means is many more people who were not able to avail a home loan or a micro enterprise loan are today getting that loan, which are small ticket size, right? And the small ticket size also means that NBFCs, fintechs, and banks are able to make money at ticket sizes today that was not possible to make money just a few years back. The question is, can we accelerate this journey? Can we see a future in which you can start disbursing very, very small ticket size loans and yet make money on that because the cost of transaction is so low? Now, this is the entire value chain of lending. If you look at from a customer's perspective, if I want to take a loan, there is a need for me to take a loan. Today, I need to get identified as a customer, and that can happen digitally through Aadhaar. On top of that, I can agree to share data, and this is where today that data sharing is not seamless. If I am a customer of a large bank, then of course the bank knows my history, or there are other ways to share data, but it's not as frictionless, which is what the account aggregator promises to change going forward, that you can take a seamless digital consent from the customer in a very secure manner, share data. And then a credit marketplace comes into picture, where if all the borrowers and lenders start following the OCEN standards, then the technology interface in a marketplace becomes quite seamless. After that, of course, if you take the entire lending journey, then I have to accept an offer, I have to, get a loan, and I have to repay my loan. So I would say if you look at the bottom, the blue color boxes are boxes where the technology is fully deployed at scale. The yellow color boxes are where we have a solution ready, but it's not fully scaled up, right? And the gray color are boxes which are still in the beta stages. So you'll see it's like the mixed bag. We have some elements of the entire lending journey end to end, which are fully at scale. There are some that are about to take off. There are some more, that are not yet fully mature. Another important aspect that's happening in India is that we used to be a country which was really data poor, and now we are becoming a country, with a lot of new data becoming available. One example is if you take all SMEs. If I was a standalone SME, then it was very hard for any bank or any NBFC to get digital data about that SME. A number of them today are coming under a marketplace. So the classic example are, Amazon, Flipkart, where I as an SME can sell my goods. But there are many more types of marketplaces that are coming up. If I'm a restaurant, then I'm supplying my food through Zomato or Swiggy, then there is digital data footprint, right? So there is travel ecosystem, health ecosystem, fashion ecosystem. There are SME marketplaces that are coming up. So we have today a large amount of digital data and digital footprints that these SMEs are leaving that was not available just a few years back, and this trend will accelerate. The question is, can we start consuming this data digitally, and then can we start providing financing basis this data, which is very different from the traditional way of lending, where you would require an SME to furnish their balance sheet and their P&L, and then analyze and then decide to give a loan to the SME. So in a nutshell, what we are seeing is, on the left hand side, if you have the concept of account aggregators, there could be various entities, whether it's banks, mutual fund companies, insurance companies, telecom companies, GST, all of them can be providers of data to the account aggregators, but also consumers of data. And as a customer, if I give a digital consent, then the lender that wants to give me loan can access all the different data points digitally, and then can instantly decide to give me a loan. That can really revolutionize the way lending is done in India. These are still early stages, but this is the concept that we are talking about. What difference can this make going forward? And on the right hand side, you will see that the same concept now, if you take into a marketplace where many different lenders come together who can get plugged into a marketplace, like many different marketplaces we talked about in the previous page. And if everyone is following the OCEN standards, then the technology interface and the data flow can become quite seamless, and the entire friction of doing a host to host or a entity to entity integration comes down, and that can provide a simple way to plug and play and provide financing. In both these instances, what happens is, essentially for a customer, he or she is just doing a transaction, and the financing becomes embedded in the transaction itself. So I'm going to Amazon and buying shoes, and I can be offered financing then and there. Or I'm selling shoes on Amazon, and I can get financing then and there. So the financing almost becomes embedded in the transaction that is taking place from the entity, and that's the future of finance going forward. So what does the future look like? I've just painted a few examples. Let's assume there is a street vendor, they are buying and selling their stuff on a daily basis. In the future, they can get a loan, which is a one-day loan. So in the morning I get a loan, I go and buy my vegetables, I sell the vegetables, and in the evening I can repay my loan. Right? Now just imagine if this has to become a reality. The ticket size is very small. The loan disbursement and the repayment has to be completely digital and instantaneous. But this is a real need of that street vendor. Another example is that if you take now a restaurant who's serving food on Zomato, basis the amount of food that the restaurant is selling, you can have a completely digital journey where a bank can provide a drawing power to the restaurant, and as and when the food orders are taken at Zomato, you can have the the money being deducted, being passed on to the bank or the NBFC who's given a loan, right? And you can keep on adjusting the the limit basis the amount of business that the restaurant is doing on that platform. And another example is now a farmer. The farmer, in this case ENAM is the government-backed agri marketplace. The farmer is on the marketplace, and the farmer is able to get financing again basis the digital footprint that the farmer is able to leave on the marketplace. Now, there are many, many more examples of what can happen going forward. You can take any digital ecosystem and embed financing into it, and that can become the future of financing going forward. But this is not a simple journey. We all understand what the challenges are when it comes to financing, right? And that's the discussion I want to have with this esteemed team of bankers and other people who can really enable this journey going forward. Are we really ready for a digital disruption the way we saw a disruption in payments, or will this be a gradual change? What opportunities does this framework open up for different entities, for large banks, small banks, for NBFCs, fintechs? What are the challenges that we will face, starting from, for example, how do we change customer behavior? How does customer really go and give a consent digitally? What benefit do the customer see, and why will they adopt this? How do we ensure that there is data that is made available on the AA platform? We've seen that challenge in the bureaus. It really happened because the regulator mandated all banks and NBFCs to share data with the bureau. Otherwise, what happens is there's a tendency that if I am a large provider of data, then I would assume that I have more to give and less to get. Then why should I share data? Right? So how will we ensure that everyone really shares data in this account aggregator framework? How do we ensure protocols which are standardized and ensure data privacy? Because we're talking about data across different entities, and what role can government and regulators play to ensuring this future? So these are some of the questions. I'll go round the table, just posing these questions. Let me just stop sharing my screen. So let me start. Rajeev, maybe I'll start from you. You've seen a journey of doing, I would say, embedded finance within RBL for many years now. You've been a small bank, trying to do many partnerships. What has been your experience, so far, and what is your view of the future of how can lending change in India?
Thanks, Ruchin. And I think, first of all, very, very nice presentation. Just gives us a perspective that, while we battle day to day, if you take a 5-7 year view, things have changed dramatically. And I think this is a good time as any to talk about the changes in the credit availability, which I think is a very, very important determinant of our GDP growth. But more specifically towards us and our experiences, perhaps out of necessity, and then a little bit of, I would say, evangelization by the environment, we were big believers starting somewhere around 14-15 on a partnership-driven financial services business system for us. Okay, I mean, we just felt that there were changes happening around us, starting with e-commerce, payment changes, and as a small player, it would not be possible for us to play a role everywhere. From a knowledge, time to market, and the size of the investment we need. So we started reaching out to people both in the financial services, the early days of fintech and the non-fintech space. And I think our learning has been tremendous. And now many of those partnerships are very deep, very scaled up, and are integral to the partner and our business model. And at the same time, we've seen some of the trends you've highlighted in terms of, the explosion of data. Many parts of the urban consumer are already, actually, in my view, already behaving like what your thesis is for the other parts of the economy. And if I have to bet something, I think one aspect of COVID, the aftermath, is that a lot of MSME and the rural supply chains would also start adopting technology-enabled services. It may not be end-to-end digital, but maybe assisted digital, at least for a while. So we basically took our learnings from the first 4-5 years. Clearly on the consumer map, the metro urban consumer, which I think the definition is widening almost every month for us, are fairly well embedded with either our partners or our own acquiring platforms. What we are now interested and doing a lot of work is in the MSME or the SME financing side, which we believe, especially post-COVID, is becoming a big reality in India. Now, there are many ways to slice it, and obviously, account aggregator and OCEN is a right, I would say, market structure and open framework to accelerate. But even before that, we have been working with anchors on digitizing both their distribution and their input chains, and then layering on financing, which actually gives us, and this is something which the larger banks have been doing in a traditional manner for decades, the supply chain finance or the vendor chain finance. Now with technology, we can link even the smallest part of the tier 2, tier 3 suppliers or the distributors, literally end to end. So whether it's the retail store or the intervening stockist or the distributor or the small manufacturer, I think all of those things are a real possibility. Obviously, our focus is to get more information on how the business performance is like, financial performance, and then build on short-term and then eventually long-term, lending solutions on top of that, because we have a flow of data, we have a flow of information. We are one of the larger partners to the merchant acquirers in India. So, some of the frontline POS and the digital side, we don't do it ourselves, but we are the banking infrastructure behind them. And that's giving us a lot of interesting insights as to what are the next round of needs these merchants would have. And some of those merchants are the street merchants, or even the more, I would say, digital, merchants, which are looking to do business in a different way. So that's a focus for us in our next stage of evolution. But I can tell you, we are big believers of what you want to call embedded finance, connected finance, finance which is actually being delivered competitively in a timely manner, relatively friction-free. I'm not saying all friction goes away, but relatively friction-free, and leveraging the data ecosystem, which India has got tremendous burst over the last 5 years. So I'll pause here.
Thanks, Rajeev. So let me, switch over to you, Mr. Tewari. Would love to hear from the perspective of the largest bank in India. How do you see, this evolving framework? Is this an opportunity or a threat, for a bank like SBI?
Thank you, Ruchin. So before I go to SBI per se, let me lay out 2-3 points. One is, I like that Cambrian explosion word, which is not very often noticed, but we are actually at that cusp, and I think UPI has already shown that. Second is, you give the example of the vegetable vendor. On a daily basis, they need credit. From whatever little I understand, they pay rates of up to 10% a day. So which is like, you can imagine the 3,650 whatever percentage on an annualized basis. Now, if you have that on one side, and you have a bank, even if you take the MSME rate of 12-15%, you can look at the kind of margin which is potentially possible. So therefore, there is a huge opportunity. There is no question on that. That if we have to serve these kind of vegetable vendors, and the trend, as you pointed out in your presentation, in terms of the transaction size getting smaller, has already started. And as you said, that as the transaction size gets smaller, it shows that the lower ticket size implies a person with lesser means getting the credit, which is typically in a banking system not easy to get. And there is no way but digital to serve these customers digitally. So therefore, there is a huge opportunity. Now coming to some of the elements of account aggregator OCEN. Account aggregator has just gone live. OCEN is still a work in progress. And we have Mr. Mahesh, and probably he'll shed more light on where we are and how can we go forward. So while we are working with OCEN also to see how we can integrate, it's a very early stage. On account aggregator, again, we have put in place policies and all, but the data finalization as to how we'll provide and how we'll use, this is still a work in progress. We have not gone live in terms of providing data. One thing which I want to point out here, that you listed on the left side on one of those slides, all the banks and mutual fund, insurance, all of these entities which are supposed to provide data and of course can use it also. One big piece which is missing, and where probably some kind of a regulatory intervention might be needed, is these ecosystems which are already there and leveraging all this data. You talked about Amazon, Flipkart, all of these. So they are already actually utilizing the data which is available in their ecosystem to enable a lending from some NBFC or a bank on a commoditized basis, where the NBFC or the bank may not even know the name, and they must just get a portfolio and have only a visibility on the transaction pattern. That's all. And there is a first loss built into, just to give some comfort. But it is such a commoditized lending, and there is such a big cut to the platform which is doing this. So I think unless we are able to force that platform also to share the data about that particular transaction, then this particular set of platforms will be excluded, and we will not have a visibility even if our data by that platform is taken through some NBFC. I think that's a significant challenge the regulator has to look at. I'm hopeful because the regulator has already said that the lending has to, at the end, happen with the regulated entity, and these are not regulated entities. But if they are such an integral part of the whole ecosystem, they are already making lending available, and they are making the transactions available on e-commerce, then surely that data must be shared, even if on an anonymized basis, and with, of course, due consent. So that's one. The second part is that there are pieces in this ecosystem already available, which are like scattered at the moment. So, for example, the DigiLocker piece, where a lot of data and a lot of documents are already available. Now, this is not widely integrated with a lot of players, and if individually they have made it available, but its availability or awareness in the general public, including MSMEs, perhaps is not of the order it should be. So, on the OCEN platform, if this becomes seamless, I'm sure the integration is being talked about, this would be a great help. Then there is CERSAI, which is there, again a key piece, which captures the details, etc. This again has to be integrated well. Again, the awareness has to be there. All the technical glitches which we are currently facing in terms of uploading and all must go, because the end point is that the customer must have a simple, convenient, intuitive experience, and hopefully gamified. We have seen the template in UPI. UPI came in 2016, all the banks started it, but in 2018 to 2021, 95% share is now with the big three. I mean, the Paytm is not even the big three, but it still has 15% share. Rest of the banks all put together is 5%. Now, we do not want that happening here in these. So we have learned a lesson in some senses, subject to all the data from these sites being available, and we upping our game in terms of utilizing suitable frameworks where OCEN can be a very good rail. But on top of that, the apps we build have to be equally good what the big tech has delivered for payment space. So that, I think, is a big opportunity, but we have got to take it. And unless we take it, we might find in the next 2-3 years, this has gone the UPI way, and we don't want that to happen. In link to this, I think I'll point out one other thing before I pause, which is all of this digital lending is very good. It is going to lead to a lot of penetration of credit, financial inclusion, all of that, and maybe hopefully also the inclusion of or spreading of insurance and mutual fund amongst a lot of people who are finding it difficult today to do it at one place. But there is a collection challenge, and that ideally is part of the challenges you mentioned. But unless we solve for that digital collection in a manner which is cost effective, we might have a situation where people might think that, okay, if I don't pay, other than the bureau history, nothing much will happen. So I think that is something we got to watch out for and have some thoughts as to how we can do it, and not impose too much cost either on the system or on the bank. And at the same time, the awareness of the customer in terms of bureau history and all continues. It is like a self-help group example where the rest of the members of the group make sure that the one person pays. Now, can we have that kind of model here also, where we lend to a group of people rather than one-on-one, which is the current model which is in the. So I think I'll stop here, and other participants can also share their experiences and thoughts. Thank you.
Thank you, Mr. Tewari. I think you've raised some very, very important points. But my net takeaway is that both Mr. Ahuja and Mr. Tewari, kind of representing two kind of extremes of the banking system, are unanimously saying that they are big believers, in the future of lending becoming digital and driven by account aggregator. Of course, there are many challenges. I think, Mr. Tewari, you pointed out many of them. So I'll move to you, Srikanth. You've been someone who's been part of this entire digital journey for lending, even before the entire account aggregator has come into picture. So we'd just love to hear from you. What has been your experience so far? But also going forward, some of the big concerns are around policy for having standardized data sharing formats, right? And also about data privacy. Now, because there are many different regulators involved here, if you're consuming data from an insurance company, which is different from consuming a CASA data from a bank, or data from telecom. How do we ensure, that there are these standard protocols set in place, and what is the industry doing about it?
Thanks for that, Ruchin, and thanks for wonderful setup, both for you, Rajeev and Tewari. I think the fundamental question that we're asking ourselves at Perfios, as a very brief introduction, we help lenders automate their processing and disbursement and assessment of loans. What we're seeing is, despite the best efforts of every lender in every channel, less than 12 to 13% of the available market of retail and SME lending is actually coming through a digital channel. I'm not even talking about full end-to-end straight-through processing of digital lending. Just the sourcing and processing of lending, the percentage that gets done digitally is less than 13% in a good month. So, as we talk to our clients, our partners, and we talk to customers ourselves, what we notice is the single biggest friction point is in data ingress, which means if you are a borrower and if you're applying for even a small value loan, let's say to purchase your TV, the amount of friction that you go through in submitting your documents, even if you're the most organized guy on the planet and you've got the monthly bank statements sorted by month, you remember each document's password, then you upload them to a site. That process, we've seen drop-off rates of up to 40-50% in some cases. People just simply give up and say it's just not worth it. Even if they go through the process, there are at least 2 or 3 places where there are errors of technical nature, user input nature, simply because we made life very, very, very cumbersome for the end customer. Now, what you've noticed, and Divya is a great example, the moment you remove friction from any process, adoption is like going to spike. We've been in the dark ages of internet banking and credit cards and debit cards, which took a lot of effort and friction from a customer to actually key in the number or actually authenticate it. So what UPI has done to payments, our sincere belief is that AA is going to beat it. Mahesh and I keep talking about this, is that AA should become the UPI of data and actually remove all the friction from widening participation. See, one story, one narrative of UPI is the volume and effect. The other narrative is about the societal change it has brought about. Every little vendor, every little pushcart vendor on the streets today has a little QR code. To me, if that is not financial inclusion, I don't know what is. I think AA has that potential to drive that next big leap of finance. However, with everything, there are 2 or 3 caution points that we need to see. Unlike payments, lending is a much more complex business. Number one, from the kind of data that we need, it's not a simple debit and credit and you're done. There are at least 7 or 8 data sources and 20 or 30 parameters that run even in the most simple of lending products. And to each of these data points coming through various sources, various channels. Most importantly, I think, is awareness of the customer over his data rights, over privacy, is appalling, if I can use a very strong word. We spoke to about 1,000 customers through one of our partners. We asked them a very simple question. You have a bank in, let's say, you have an account in, let's say, ICICI, and you have these statements, you have a transaction. Who do you think the data belongs to? Right? Less than 35% of people said that the data is mine. Everybody believed it's a bank's data. So that tells you a lot in terms of customers' awareness of her rights, of her agency in exercising those rights on her data. And there is a massive, massive task ahead of us, just in educating customers that you, Mr. Customer, are actually the principal of this data. You are the data principal. You have the rights that we help you establish. Everything else is second. yes, there are protocols, there are systemic checks and balances, there are regulations that need to come in place that, only certain regulated entities are part of the system. But I think if I have to pick one single systemic challenge about customer awareness. The second is, I think you mentioned it from a multi-regulator perspective, that on the left side of that slide, you found at least 5 different industries having to come together to make this ecosystem take off. My sense from having read the data protection bill that just got tabled in Parliament last week, the sense that I see is coming up is the RBI is the sponsor regulator today. And for the first couple of years, it absolutely makes sense to scale account aggregation in the financial services sector because it is the most data dense, it is the most technically mature, and at least 5 years ahead of most other industries. Eventually, I think the Data Protection Authority, which gets set up as part of the data protection bill, should have, I think, a set of overarching guidelines, standards, protocols, supervisory powers in making sure that the right entities get access to the data and there is a gating mechanism. You don't want any Tom, Dick and Harry to get access to your banking data. So there has to be some kind of very strong gating mechanism that this FIU in our partners or a data consumer happens to be regulated and strongly regulated, has the necessary protocol. On a different front, we're also working with some technology solutions with big technology partners. There are protocols like confidential computing that are available from a technical framework. At Perfios, we're working with some of them along with iSpirit to figure out, is there an easy module that we can develop that guarantees privacy by design, that makes sure that when you share your data, it is in an environment which is guaranteed as private. And the user of the data, let's say a lender or a wealth manager, only gets the 5 or 6 parameters that she needs. She doesn't necessarily need to see all the data that goes in. So the short answer to your question is 3 big priorities need to fall in place. Number one, consumer awareness, and this is a collective responsibility. We have to let customers know that they have agency over their data. 2, regulations need to somehow coalesce in a way which enables a lot more participation without necessarily being a huge compliance overhead. And third, technology solutions, I think, are progressing rapidly, where in lockstep with regulation, a technology solution actually limit the visibility of this data downstream. A lot of this is very, very early stages. I must shout out to Mahesh and folks in the iSpirit ecosystem for being key drivers in some of these discussions. But like UPI, I think I was there at the technical launch when Ranjan did the demo. I think it was 2015 or 2016. And it took 4 or 5 years for the ecosystem to scale. We're just hoping that it gets done in half the time in game. Back to you.
Yes, thanks, Srikanth, for so beautifully summarizing, the big challenges. Just moving on, Mr. Ranjan, one of the big sectors that have been, I would say, not so well covered by the formal sector of banks and NBFCs is the micro and small enterprises. Now, of course, we've seen a big change in terms of many of them becoming part of the ecosystems that I talked about. What has been your experience, of trying to extend credit to the micro and small enterprises? What has worked, so far for you, and what changes do you think, going forward can happen to really enable financing to this critical sector?
Thanks, Ruchin, for having me here, and thanks to the entire FIBAC team for giving me this opportunity. See, as you said, there is a huge opportunity in the micro and small segments. So if you look at, and we all talk about the MSME sector, which is, one end is the micro and another end is the medium. There are, as per the last count, more than 60 million MSMEs. And of that, over 70% do not have any access to formal credit. And if you look at the number of these micro enterprises, that is humongous. more than 90% of this entire MSME universe is the micro enterprise. If you look at the universe to which banks and the NBFCs and other lenders have supported the micro and small enterprises, I think they have done a great service over the last 20 years or so. At Union Bank of India, if we see, we are very positively looking at this segment because see, over the years, when today also we meet customers, they narrate us the story that they started with 80,000 and 1 lakh rupees of credit, and today they are enjoying 20 crores and 30 crores of credit. So that's how banks have supported. But the challenge is, how do we reach to the next mile? How do we reach to those who are new to credit, who have never availed from a banking or NBFCs? There, I think this kind of framework will come very handy. And the slide that you are showing, that in the first decade of this millennium, the mortgages grew at 50% CAGR. My belief is that combination of UPI, AA and OCEN can actually enable similar 50-60% of CAGR not only for 2020s, but even for the decade of 2030s. That is the potential. How do we do that? Opportunities everybody is talking about. And how do we do that is the more important. How to address the challenge. I see, if I look at from the lender's perspective, as Mr. Tewari said, that some of the opportunities we missed in the beginning. And UPI is a great example, which when it started, we thought that it is just one of the another payment system enabler. But the way it transformed suddenly, it took all of us by surprise. How do we ensure that this does not happen this time? I think one of the challenge that as an institution we face, and particularly being a large lending institution, is about the mindset change. See, all of us today lend to micro and small enterprises with knowing them with a very high-touch experience. We know them, we know where their shop is, we know where they're supplying to, and now from there we have to move to a situation where without having a connect, without knowing the customer actually physically, we have to extend credit to them. In fact, I'll share one example which we have done in Union Bank of India, that is of the AA and OCEN framework, that very, very interesting, that for Shishu Mudra loans of micro enterprises up to 50,000 rupees, bank has introduced a straight-through process. And when I say straight-through process, it is end-to-end digital. So to say, a prospective Shishu Mudra borrower can apply for a loan up to 50,000 rupees without reaching out to any branch of the bank, without talking to any official of the bank. And if the customer meets the criteria defined by the bank, then within 30 minutes, the loan amount gets credited. So that is the potential. But how do you scale it up? That's what we have to see. I would say another challenge that legacy banks, large banks like us, which we have to address for this micro and small enterprises lending, leveraging this AA and OCEN network, is how do you create the technology architecture which is ready to partner with, ready to talk to other fintech players and the partners like account aggregator, TSPs and LSPs. That's very important. So building a open architecture, microservices architecture where everything can come together is very important. And third aspect, that too related to technology, is that most of the change which is happening today is in actually public. So if you talk to any fintech, they are only comfortable in doing it public. While banks traditionally still, just from the security point of view, they are not yet so ready for migrating to public cloud. I think these are the three challenges I would see. But opportunity is huge for lending to micro and small enterprises. I can see, I was reading a report and which I feel can be a reality, that if OCEN and AA can be properly leveraged, it will address $150 billion of unmet credit demand for MSEs over the next 4 or 5 years. So I'll take a pause here. Thank you.
Thank you, Mr. Ranjan. I think you beautifully summarized the whole opportunity, but also the challenges. Some of the large legacy banks face. But I've also seen, when these large banks make the changes, then the opportunity can be very, very large. Finally, coming to you, Mahesh, you've been the orchestrator, and seen kind of the action from the front end. A couple of questions to you. One is, we spoke about the role of multiple regulators coming together. I I think, if this really has to become a reality, no one entity or one institution, including, someone like a Sahamati, can make this entire change happen. So what role can other industry bodies play, like an IBA, or other industry bodies, in just ensuring that every bank, every institution comes on board, and starts participating in this framework?
Yeah, great question actually. Sorry for interrupting. Were you asking another question?
No, please go ahead with this one, Mahesh.
So you're exactly right. We alone, Sahamati, until last year, I was the only one, and now we are the three in the company. And in India, we have at least 250 banks and 10,000 NBFCs, insurance companies, and there is no way, we alone can do it. And also, thanks to iSpirit, for many years we have been able to reach the large banks, including State Bank of India, the Union Bank, and all of them. So we have to, work with your FICCI and the banking association, IBA, etc. If we are able to work, jointly, hold sessions, we'll be able to reach the actual, CXOs in each of these, the decision makers in all these institutions, where, we are able to actually clear their doubts, and especially the misinformation sometimes about that. They should not be afraid about the account aggregator framework, because many of the large institutions think that, okay, the moment we come on AA, we will be going to give out data. Okay, it is a different thing that you will see that soon it will become the law. Like once your personal data privacy bill comes, you're happy or not, you have to share the data. But what I tell the large institutions is that focus on the NTB and NTC sector, the new to bank and new to credit, which is a far more, larger opportunity for us to focus on, instead of worrying about that we are going to be sharing data. So I would say that if we are able to work with, all the industry folks associations, at the national level, state level, we'll be able to increase, our reach.
Thanks, Mahesh. And just on the OCEN, if you can just share your thoughts, where are we in terms of the maturity of the OCEN framework? And, when do you think, we'll be ready for large-scale adoption of OCEN in India?
See, I think the year 2022 will be a very, very important year, and it will be a very, very successful year when it comes to AA and OCEN. See, OCEN as a framework is already ready. Okay, we have already run it, run a few pilot actually almost a year ago. Now we are always reading in the media about the online, your grocery folks are fighting to deliver like inside 10 minutes. I'm telling that giving grocery in 10 minutes is not all that important. I would say that ensuring the loan application is approved, or a decision is taken inside 10 minutes is more important to the country. Okay, I don't know if anybody is cooking and then worrying that, okay, I need a grocery inside 10 minutes. I don't think that's happening. That is a valuation game. But if we all work together, I'm telling OCEN will ensure. I have seen end-to-end, including the money reaching the borrower using UPI, has happened in about 3 minutes. That is a game changer. That is where we are helping the country, the new India, and ensuring the GDP will increase. Like by 2025, the size of the cash flow lending in India will be 25 lakh crores a year. So how will all these institutions who want to lend, get a significant piece of this excellent pie, the big expanding pie? It has to be digital, either fully digital, or somebody is going factory to factory, home to home, to help folks who are not having a smartphone and to ensure this lending is actually happening. So OCEN will ensure that the way the lenders are speaking to many lending marketplaces, to inform you, the number of folks who have shown interest in OCEN, to build a marketplace is almost 75 institutions have shown interest. So instead of the borrower going to the lender, now the lender will be going to the borrower, where the borrowers are. Like it can be Swiggy, Just Dial, India Mart, where they already have the MSMEs there. So the borrowers will have to speak to this 100 and odd, the loan service providers, and the only way they'll be able to speak to so many of them is if the communication is standardized, like how in AA all the schemas are standardized. It makes the life easy. In the same way, if the OCEN is going to help to integrate each of the lender with any marketplace, I would say within a week. So OCEN will help the borrower get actually the best deal, and the lenders will be able to easily expand the footprint.
Ruchin, can I just make one point?
Please go ahead.
Yeah, what actually Mahesh said, I draw a corollary from what happened more than a decade ago about the credit bureaus. I think we were in a similar situation where the banks thought that if we start sharing data with the credit bureaus, actually it is going to benefit other banks and other lenders. For many years, actually, then the law came that you have to share with every credit bureau. You were just sharing, we did not realize the power of it. When the other lenders started leveraging the data, then actually banks started realizing what it is. I think in AA, we are in the similar moment. And early we realize it better it is for all of us.
Yeah. Well said.
Very well put, Mr. Ranjan. I think we are also just exactly on time. Are there any questions from the audience? I have not seen any on the chat. Okay, I think this is one of the things that I miss about the the physical discussions. Yes. Real questions that come in the panel discussion. But I'll just summarize the entire discussion. I feel very energized by this discussion today. I think unanimously this whole panel strongly believe that we are at the cusp of a major revolution, a major disruption that will happen in the way lending is done. I like the parallel about 10 minutes grocery delivery. We'll have 3 minutes, not 10 minutes, a 3-minute loan delivery that can really happen to all sections of society. I think some important points that came out from the panel, just to summarize. Point number one, customer awareness is a very important issue for customers to both be aware of their rights, but also the power of AA so that they can adopt the AA and start giving consent. I think the second thing that came out quite strongly was the role that different regulators will play after the bill is passed, just to ensure that there is a simple, standardized way of sharing information, that the information is only shared with the right kind of entities, and there are strong protocols of sharing information. I think the third element is technology. We've seen how technology can play a big role, where friction has to go down. It has to be simple, scalable, and interoperable, that different people can come in and plug and play and expand the entire universe. Also, there was a point that was made that there are bits and pieces of this infrastructure already in place, like a DigiLocker, like say, how can we just ensure that all of these are integrated into one overarching schema, so that individual banks or lenders don't have to do these point-to-point integration. There is a larger kind of framework that is readily available. And I think lastly, it was very nicely put by you, Mr. Ranjan, was a mindset change from big lenders, a mindset change in terms of how lending is done. It's not touch and feel, right? But also about the power of data, that eventually even the biggest bank will actually gain more than they lose in terms of sharing data, because we'll just grow the pie, and if we grow the pie, I think everyone will benefit, right? So I think that's the future of lending. We really hope that 2022 will be the year of change when it comes to lending, and the entire focus will move away just from payments when it comes to digital to really lending, and that will be the true financial inclusion in India. Thank you so much. It was a pleasure, having all of you on this panel.
Thank you.